Hello and welcome everyone to the week ahead commodity reports, where we of course will be reviewing the markets for the week ahead. As we mentioned last week, it's been a huge start to 2021 for us at the Gold and Silver Club, banking 10,000 points at the beginning of last week. So of course, for every one lot that you would trade, that's $100,000 of profit. For every 10 lots that you would trade, that's $1 million of profit. You can see here the successes that our clients at the Gold and Silver Club have been having, making the equivalent of someone's annual salary in the matter of 1 month, and many of our clients generating 6 and 7 figures in just 1 month. So with that, as we go into a new week here, what do you need to be aware of? Well, we've said it before that you need to be looking at the markets right now as a trader's market. It really is a trader's paradise. It's not a buy and hold market. You're going to benefit a lot more if you're regularly banking those profits. A prime example of that was last week, where gold prices, they broke out to $1,959 per ounce, and they tumbled from the middle of the week, selling off from the 2-month highs all the way down to $1,828 per ounce. If you've just been buying and holding, you've effectively given back all of your profit, and in fact you probably ended up with a net loss. However, if you've been trading, you bank at the 2-month highs, then you reload on the 1,300 point sell-off, which is very lucrative. And last week the pullback was identical to the pullbacks that we've seen last year in March, in August and November. The bigger the pullback, the greater the rebound. So this enables you to reload and then take advantage of prices to go higher again. And of course, with all of the stimulus that we have coming in the months ahead, this provides a really perfect opportunity to re-establish positions. And then of course, last week we had the political wins by the Democratic candidates in 2 Senate runoff races in Georgia, and that paves the way forward for a lot of stimulus in 2021 from President-elect Joe Biden after he takes office from January the 20th. Now, the confirmation of the Democrats controlling all 3 branches of government, the blue wave is expected to create a massive level of fiscal and monetary stimulus, which will continue to provide extremely bullish backdrop for commodity prices into 2021. The last time the Democrats controlled the House, Senate and the White House, gold was trading below $900 per ounce in November of 2008. 2 years later, gold prices, they peaked at $1,921 per ounce. So if history is anything to go by, we could be in for an exciting and lucrative period ahead. In addition to that, Friday's non-farm payroll data showed that the US lost jobs in December for the first time in 8 months, as the spread of the coronavirus and variants of COVID-19 have forced now fresh lockdowns in parts of the USA. Now, given the rising inflation expectations and also the weakening dollar, and still no clear end in sight to the pandemic, demand for safe havens should remain well supported, which will continue to drive precious metals and commodity prices higher throughout 2021 and beyond. In fact, according to Goldman Sachs, we're now at the early stages of a commodity super cycle, and we're seeing the telltale signs of that already. We've already seen metals hitting multi-year highs. We've seen a rapidly weakening US dollar. Crude oil prices, they broke out to $50 per barrel. We have unprecedented levels of economic and fiscal stimulus, and of course, a return to inflation in 2021. COVID-19 and lockdowns, they're not going away. It is the new normal. There are new variants in the UK, in the USA, and again, this is a perfect opportunity for you to upskill at the moment. Definitely don't want to be wasting a good lockdown here. There are plenty of opportunities in the markets for you right now to capitalize on. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we go into a new week. Firstly, let's move over to gold. So as we mentioned, we banked 10,000 points on gold at the beginning of the week. We had the breakout over Monday, Tuesday, and also Wednesday. As we mentioned on both gold and silver asset of the day, watch out for the volatility later on in the week of the back of the Senate vote, minutes of the FOMC, and also Friday's non-farm payroll data. Keep locking in those profits. Again, it's a trader's market right now. The optimal here is to be banking profits on the breakout that we had to 2-month highs at the beginning of the week, and then being patient. And then what we've done is we've reloaded here on Friday after the non-farm payroll data, taking advantage of this massive sell-off in order to establish 3 new position. So we've locked in profits at the start of the week, and then we've reloaded here after non-farm payrolls on Friday. So this sets up really well for trading. And essentially, if all you've done is been buying and holding over the month of December, you basically given back all of that profit, and you're potentially actually even worse, you're in a loss. As I mentioned previously, the overall narrative as we see a new year, many traders, they're coming back to the screens. They're seeing that gold has broken out to 2-month highs, and they are forced to FOMO in. And just at the point that they're FOMOing in near the 2-month highs, market makers are very aware of this. You can see it, for example, on the higher time frames where you've had the breakout of the bull flag continuation pattern, and this was a trap for the retail market where essentially they have been slammed over Wednesday, Thursday, and they've been liquidated over non-farm payroll on Friday. They're now panic selling out of their positions as you see such a big magnitude of a sell-off, 1,300 point sell-off from the highs here. And now that they've all been liquidated, this is where it often provides a good opportunity. We're back in an area of liquidity that found support going back to the beginning of December. And you can see very clearly we bounced off that low at 1,828 US dollars per ounce. In fact, some of our latest positions on Friday, they've already moved straight into profit there. So where we're looking going into a new week, this could be very lucrative. Now I'll move over to silver. So silver, we still maintain 4 positions on silver because we added those between 22 to 24 US dollars per ounce. And you can see we've had a pullback here on Friday. Now what I want to observe going into next week is, of course, silver and platinum, which have been very interesting over the last few days. Silver and platinum have led the move higher, but at the same time, when we get these sell-offs, they tend to also have bigger magnitude of a sell-off. If you look at silver, for example, on Friday, the peak of the sell-off was a 10% move to the downside. It's down 6.46% on the day on Friday here. But silver's much more volatile. So you've got, of course, in terms of the precious metals, gold, silver, platinum, you want to be tracking those ratios, track the intermarket correlations. What I would look at going into next week on the metals, often it's the case that you'll get this selling pressure that will last 3 consecutive days, right? We've seen it on gold, we've seen it on silver and platinum. And usually as you go into a fresh week, you can see fresh buying, especially now that we've got the minutes of the FOMC out of the way, we've got the Senate vote out of the way. We know, of course, more stimulus is coming. You've got that event risk out of the way. A lot of the retail market have been shaken out of the move, and this often creates a really good buy opportunity. So, of course, what you want to see next week is whether we're going to see gold, silver consolidate around these swing lows that were tested on Friday and then slowly potentially start to retrace higher, or whether we're going to see any more chop around these zones at the beginning of next week. So often what you will see, and I'll give you gold as the example, normally the price action after a non-farm payroll like that, you're either going to see gold start to get bid off the open and then develop an inside day or inside candle here, and then that will be at a decision point with the potential to retrace higher over the course of the week here, where you could see a revisit back towards levels that were broken down from off the back of non-farm payroll. Or we need to see gold chop about a bit over the next 3 days. We may see a retest back to these areas of liquidity again over potentially Monday, Tuesday, Wednesday. Just test this zone on the left. So that would be between approximately the 1828 around that zone down to 1800 if we were to see further selling pressure. Usually that would take place over Monday, Tuesday, Wednesday, and then later on in the week, that's where you can again see the bounce back and rally over Thursday and Friday. But it may not need to roll over and come back and test those zones. We may, as I mentioned, we've been already buying at this area of liquidity. We may just see it start to pick up momentum at the beginning of next week and start to immediately get bid after the shakeout that we've essentially seen on Friday there. So I'd watch out for that on gold as we go into next week. If you look at silver, for example, you've still got a higher low than we've seen previously here and higher highs. It's the same on gold as well. Although you've had this fairly significant sell-off to the downside, you are still holding at key areas of support. And you can see that on gold as well. We've broken out to 2-month highs. We've effectively still got a higher low at the moment. What I would go out to is the higher time frames at the moment. So the monthly is still quite fresh here for gold. So we've broken out to 2-month highs. We're only 1 week into January, so we could still see a lot of change between now and the end of the month. You've still got on higher time frames, of course, bullish engulfing candle over the month of December here. We've already broken above those highs. If you look at silver, which has been leading on the higher time frames, we've essentially just have a retracement after breaking above the previous month's highs. Same on platinum as well. We've broken out here on platinum. So it could just be this normal volatility that we get in the first week of January, which is very common, especially in the lead up to non-farm payroll data. You're going to see this retracement in the first week week. It basically shakes out a lot of the traders who are too late to the move. They're basically FOMO'd in. They missed the move over the whole of December. They missed the 10,000 points that we've, of course, banked with our members, our clients at the Gold and Silver Club at the start of the week, and then they've been flushed out of the trades. And as I mentioned before, trading, especially commodities, is a zero-sum game. So in order for someone to win, someone else has to lose. Predominantly, it's the retail market that are losing, and it's the banks, the institutions, the market makers, the hedge funds that are making all of the money. The last week is a prime example of that. And the trick is, of course, to trade the same way that the banks, the institutions, and the hedge funds, the money managers do as well. This is why it's so important to be aware of their activity in the market, the key areas that they target, major liquidity zones, capital flows, being very aware of macroeconomics, the intermarket correlations, the daily, the monthly, the weekly cycles, seasonality, and also combine that with our research, our data, our in-house intelligence. That will help you massively to get an edge. If you're using just pure technical analysis, that is not going to cut it in 2021. Many strategies that may have worked 3 or 5 years ago, they're not going to work in today's market conditions. Market makers, they know exactly the way that technical traders are taught. So if you find often, for example, gold in the last week, if you've ended up buying right in at the high here and you've ended up being liquidated right at the low, this is exactly what many market makers and so forth, they prey on in the market, is that you've been taught to trade a breakout like that on a weekly chart. I'll show you the example again, is that many technical traders, they're taught to trade a breakout of a weekly chart like that. They subsequently buy in at the high only to then get liquidated. They then panic sell out at the low, and this is likely an area where you could start to see gold catch a bid as we go into next week. So, of course, with that, if you would like to join a community of successful traders, get an edge in your trading, learn the research-driven approach, and join our live trading room mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You have access to real-time trade ideas, institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will, of course, get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.